Let's start with the TLTROs. What are your expectations? Are we going to once again see a disappointing result?
Well, that's what people seem to be saying. There seems to be no interest from the banks for these TLTROs. We saw that really disappointing take-up a few months ago, the first offer of these TLTROs of less than 100 billion euros. The ECB has made 400 billion euros available for this tranche, and yet expectations of less than 200 billion euros again. And there's even talk that we could see less than 150 billion euros taken up here. So this is going to do the ECB a lot of harm. Their aim is to raise their balance sheet from 2 trillion euros to 3 trillion euros in order to try and stimulate the economy. But if the take-up of these TLTROs is so poor, then that's really going to damage the attempts to do that. And then we've got to look at what attempt this could have, what impact this could have on the inflation figure, which is so close to that deflation territory.
So what are they going to do about it? And I know we've got the Bundesbank on one hand, we've got Draghi, and they're fighting head to head. It looks like the Bundesbank's probably going to win out right now. What are they going to do about it? That's what the market wants to know.
Well, I think they're going to announce some more stimulus measures early next year. There was a lot of talk after the last ECB meeting, a lot of speculation that the ECB were drawing up plans for quantitative easing in January, or broad-based quantitative easing, whatever that means. It doesn't sound like it's going to be the type of quantitative easing that we had in the UK or the US. But I'll be even surprised if we see that. I think the ECB are going to try other measures first. There's been talk of purchasing of corporate debt. I think they're going to push harder with the ABS securities. I think they're going to push harder with the covered bonds as well. So I think they're going to try a number of things before they try outright quantitative easing as we know it, being the purchase of government bonds, because at the end of the day there's a lot of political debate in the Eurozone about the purchase of government debt, and there's also the issues surrounding how they will go about doing it. There is no common Euro bond. It's not like what we had in the UK or the US. There's going to have to be discussions about what quality the bonds have to be, which countries' bonds they buy and how much they buy. It's a lot more complex issue.
All right, let's talk about some of these stocks. I mentioned Tesco. S&P warning it may downgrade to junk. I mean, how much worse is this going to get for Tesco? And if that happens, of course, that's a vicious cycle almost starting, isn't it?
Well, exactly, and I think when you say how much worse can it get for Tesco, I guess could have asked this question 6 months ago, and people would say surely it can't get much worse, and it's got so much worse again. The problem that Tesco have right now is you've got these discount stores, the Lidls, the Aldis, which people are just favouring at the moment. People's wallets are looking a little thin right now, and they're having to look for these better discounts. And the worst thing that's happened throughout this recession, or throughout the Great Recession, is people have realised that just because they're paying less money in Aldi, just because they're paying less money in Lidl, it doesn't mean the quality's any worse. In fact, most people would say the quality is better.